Now let's bring in our market panel. Joining us now, Vital Knowledge founder Adam Crisafulli and Main Street Research CIO James Demmert. Guys, welcome. James, you think we are actually about to get a new bull market led by AI, but lifting all sectors? That sounds great. How are we going to know if it's starting?
Thanks, John. Good to see you. And yeah, that's correct. We do believe it's a new bull market starting, AI-led, but all other sectors to follow as opposed to last rally. And we see a perfect setup, a setup that you really didn't see at the bottom of the corrections we've had, really for the last 18 months. Number one, the Fed being done, and I can give you more information about that. CPI close enough, yes, not there yet, but we think close enough that stocks are going to start to discount it being where it needs to be. Then you've got some technical stuff, very oversold market with elevated VIX, which is what we saw back in March during the last correction. And valuation of equities, basically looking forward with managed inflation, very attractive at these levels.
Adam, are you convinced?
I wouldn't go so far as to say you're on the brink of a brand new bull cycle. I do think that in the very near term, this rally that kicked off last week can continue a bit further. I think Powell has a big speech next Thursday that's going to be very important. If he echoes the messaging that's been coming from some of his colleagues yesterday about how the higher yields are doing a lot of the work of the Fed, removing the need for one more rate hike, I think that will be received well. But I still think that there's an awful lot of monetary tightening that's still in the system. Each tick lower in the CPI is raising real yields in the economy. You still have aggressive balance sheet runoff taking place, and you still have the lagged effect of prior tightening that's really hasn't even hit the full market yet. There was an interesting Boston Fed report out today talking about how excess savings of companies, not consumers, but excess savings of companies have dwindled over the last couple of years, and now you're going to start to see companies really feel the effects of the recent hike in yield. So I'm a bull in the near term, but then I think that you're going to run into some headwinds again, and that will require some time to work off. Okay,
James, some names you like: Booking Holdings, Hitachi, Alphabet. I'm particularly curious about Booking Holdings, given the mixed news that we've been hearing on airlines lately. Booking has had a nice run over the past year, isn't too far off the highs. Why do you still like it?
Yeah, it's about 10% off the highs, John. And we like it here because, again, look at the company, 30% earnings growth, very fat margins. Yes, there's increase in airline costs, of course, relative to oil and energy. We do think those are short-term phenomena. I think investors get a little bit, as you see in a lot of parts of the market this week, get a little bit too sensitive about short-term moves in oil or how that affects airlines. We think that is not going to be the big story for Booking as we go further into the fourth quarter and into certainly 2024.
Okay. Yeah, I guess if you look at it, up 50% so far year to date, the 10% doesn't look that big on the chart. But Adam, when I look to sort of some sectors that were down today, within health, medical devices still struggling. What are you seeing there as far as what's driving it? And do you have any opinion on whether they're going to get a bounce?
You've seen this, this GLP-1 wrecking ball, really work through not only healthcare but consumer staples as well. Beverage and food-linked consumer staples and medical device stocks have just been.
And that's the weight loss drugs, which we affectionately call GLP-1s. Yeah.
Yes, exactly. So the anti-obesity drugs is arguably a bigger investment theme this year than artificial intelligence as far as the effect it's having on the market. You had DaVita was crushed yesterday on this Novo Nordisk trial result on kidney failure. They came out this morning and said that they don't see any effect to their business, and the stock came for sale again. Pepsi results earlier in the week were decent. They raised guidance. They provided decent guidance for next year. The whole space continues to come for sale. So it's kind of a hard concern for these companies to rebut because it's going to take place over the next several years. It's not anything near term. And markets are very concerned that this is a huge secular theme that's going to change huge portions of the economy, and it's a huge headwind for a lot of these names. A lot of these companies report earnings next week, so we'll get to hear an update. Abbott, J&J, you get Nestle sales and a few other companies in this space. So it'll be interesting to hear what they say. But again, you've had a couple of firms out this week already push back, and it hasn't really had any effect on how these names are trading.
Yeah, artificial intelligence and artificial diets, both big. Adam Crisafulli, James Demmert, thanks to you both.